What's up, you guys? Welcome back to the Average Joe on Money Financial channel, and in this video we are talking again Vanguard versus Fidelity. More specifically, we are talking about where is the best place in the year 2020 between Vanguard and Fidelity to put your money when it comes to investing in exchange-traded funds. In this video, we're going to break down what exactly an exchange-traded fund is. We're going to talk about what Fidelity offers when it comes to exchange-traded funds. We're going to talk about what Vanguard offers. And by the end of the video, you should be educated enough as the average Joe investor out there to understand where is the best place for you to put your money when it comes to ETFs in 2020. All right, let's go ahead and get started here. I don't want to waste a single moment of your time. You clicked on my video when you could have clicked on others. And for that, I thank you. Let's talk Vanguard versus Fidelity when it comes to ETFs. Now, first off, what exactly is an exchange-traded fund? The most basic and simple definition I can give you, and I will expand on this in a second, is that an exchange-traded fund is a mutual fund that trades like a stock. On this channel, we've talked about the differences between indexed mutual funds and exchange-traded funds. They're essentially the same type of investment, and by that I mean that indexed mutual funds and exchange-traded funds both invest in the overall S&P 500, mid-cap indexes, small-cap indexes, dividend-paying companies, different sectors of the economy, very similar investments, but the structure of the actual investment product is different. I definitely prefer exchange-traded funds, and let me tell you why. With an indexed mutual fund, the underlying value of the fund is based on the NAV, the net asset value, and that is calculated based on the underlying value of all of the assets in the indexed mutual fund. And this cannot be calculated real time throughout the trading day. It's done once a day at the end of business, at the end of trading. And that, once they've calculated the new net asset value, that is when you can actually purchase shares of the index fund from the mutual fund company. You can't do it at 2 p.m. or 1 p.m. or 9:30. You can certainly submit your order, but your order will not go through until the end of the day based on whatever that price is. An exchange-traded fund also has a net asset value or NAV, and it is also calculated once a day. But the difference is, with an exchange-traded fund, you can purchase that fund, like I said, like a stock at any point throughout the day. So if you want to buy it at 8:30, you can do so, and you'll get that price that you purchase it for. If it's 1:30 or 10:30, that's the price at that moment you buy it that you get it for. So when you think about exchange-traded funds, think about it as instant diversification, because you're not buying one stock, you're buying potentially hundreds or thousands of stocks. Instant diversification, as well as a product that you can invest in throughout the trading day. So if you see that the market has taken a massive downturn for the first half of the trading day, you can buy shares of that exchange-traded fund right then, and you get that price. Whereas with an indexed mutual fund, you could purchase shares at 10 a.m., but if the market bounces back by the end of the trading day, that's the price you're gonna get, not the low point in the trading day. Okay, so that is an exchange-traded fund, or ETF, and I definitely, like I said, prefer ETFs. I own only ETFs in my M1 Finance Roth IRA. But now we need to have a conversation about the differences between Fidelity's exchange-traded funds and Vanguard's exchange-traded funds, and there are some differences here. There are definitely some philosophy differences between Fidelity and Vanguard, specifically when it comes to exchange-traded funds. Vanguard is all about index investing at a very low cost. They've always been about value, and they've always been about the average Joe investor out there. And that spills over into their exchange-traded funds. Between their ETFs and their indexed mutual funds, they almost have a complete crossover between all of their investments. So if you've got an S&P 500 mutual fund, you can buy the ETF version. Same thing for their mid-cap growth, mid-cap value, their Russell 1000 funds, their sector funds. They all have ETF replica versions of their mutual funds. And all of Vanguard's ETFs have an extremely low expense ratio, anywhere from 0.03% to 0.10% when you look at their stock exchange-traded funds. The truth of the matter is, when it comes to Fidelity's exchange-traded funds, not all of them are created equal, and there's certainly a lot less of them. Their expense ratios are a little bit higher, actually significantly higher in some cases, than Vanguard's exchange-traded funds. And honestly, as you look at the two different websites here, Vanguard's exchange-traded fund offering is very easy to navigate, very easy to understand what you're investing in and the different options. When you look at Fidelity's exchange-traded fund, there's not as many offerings like I mentioned, but also it's kind of difficult at times to understand what you're actually investing in. They talk about different factor investing strategies and other things like that. It's a little bit difficult for the average Joe investor out there, including myself, to understand really what you're buying unless you dig down underneath the surface. Additionally, one thing that Fidelity does that Vanguard does not do at all is that they do actually offer 3 different actively managed exchange traded funds, which is actually very rare to see. An actively managed exchange traded fund is where you have an asset manager who manages the investments in the exchange traded fund. With most ETFs that are index based, it's based on the index. It's very passive. If the overall index says that you weight one company at 10%, another at 5%, or these are the 500 companies, these are the 1,000 companies, those are the 1,000 companies, and you just are trying to match the index. Whereas with an actively managed index fund or mutual fund, the portfolio manager is making buy and sell decisions, not based off of an index, but trying to beat an index. And there's a lot of research out there that shows that over the long term, over 1, 3, 5, 10 years, over 15 years, that the majority of actively managed exchange traded funds and mutual funds do not outperform the index. They actually underperform the overall index. And the one thing about actively traded ETFs and mutual funds is that they have higher expense ratios because they have to pay for the extra transaction costs for that portfolio manager to actually make these buy and sell decisions and pay for all these transactions, but they also need to pay for the salary of the portfolio manager. And it's going to be higher to pay for that person than it is for somebody who manages a passively managed exchange traded fund. Okay, let's talk a little bit more about who has the better ETF options as of right now here in July of 2020. Honestly, when I looked at both Fidelity and Vanguard's offerings when it comes to sector exchange traded funds or exchange traded funds that try to track a specific sector of the economy, so information technology only or consumer discretionary, real estate, energy, they're very equal. They both perform about the same, and their expense ratios are also about the same. Vanguard actually has a little bit higher of an expense ratio for these, 0.10% for all their sectors, whereas Fidelity has 0.084. It's truly a very small difference between the two. But after the sector ETFs, that's where the differences end. Vanguard has a very diverse offering of stock and bond exchange traded funds. To be specific, Vanguard has 45 different stock exchange traded funds, whereas Fidelity only has 16 different options, and the majority of those, not including the sector ETFs, the majority of those have much higher expense ratios, anywhere from 0.2, 0.3, 0.4% compared to Vanguard offering usually between 0.04% and maybe 0.10, 0.12%. When it comes to bond exchange traded funds, Vanguard has 18 different bond ETF options, whereas Fidelity only has 5 different options available. I didn't break down every single different bond ETF and stock ETF to look at which one was outperforming. That would have taken a lot of time. But just from an offering standpoint, Vanguard has 18 different options and Fidelity only has 5. You'll also notice when you compare and contrast Vanguard and Fidelity's different exchange traded fund offerings that Vanguard definitely focuses on the S&P 500 and the Russell 1000 as underlying indexes, whereas with Fidelity, they focus primarily on the NASDAQ composite index or sectors of the economy. There's a number of different options available with Vanguard to track certain indexes of the overall economy and not so much with Fidelity. They actually don't even have an S&P 500 ETF at all, though some of their large cap ETFs do somewhat model the S&P 500. They don't have 500 holdings in them, but the top 10, top 15, top 20 investments certainly line up with the S&P 500. In a future video, we're going to talk more about indexed mutual funds, and we're going to compare Vanguard and Fidelity to see which has the better offering of indexed mutual funds. That's going to be a little bit closer of a battle, but in this case, from what I can see here, based on my own preferences for sure, but also just looking at the different offerings and the expense ratios, I gotta go with Vanguard here when it comes to exchange traded funds. They just have a higher focus on delivering value for their investors on this specific product. Like I said, it's gonna be a little bit closer of a battle when it comes to indexed mutual funds because Fidelity is kind of the low-cost leader now when it comes to indexed mutual funds. We'll talk more about that in a future video. But now is your opportunity to leave your 2 cents in the comments below. How do you feel about Vanguard versus Fidelity? Where do you invest? Do you have a Vanguard or a Fidelity brokerage account or a retirement account? Which of these companies' investments do you actually own? Do you even have maybe a brokerage account with a different investment company like M1 Finance or Robinhood? Because with those brokerages, you can actually own both Vanguard and Fidelity exchange traded funds. Make sure to leave your 2 cents in the comments below. So, if you haven't done it yet, and how have you not done it yet? Make sure to hit that subscribe button below and click on that notification bell to be alerted to all of my weekly videos. Every week, I put out 2 to 3 personal finance videos designed to help the average Joe out there. People like you and me with all things personal finance, whether it's budgeting, paying off debt, investing for your future, how to manage credit cards, and everything in between. So if that resonates with you, you should consider hitting that subscribe button below and joining the Average Joe on Money financial community. The great news for you though is even though this video is about to end, the learning doesn't have to stop. You can click on these videos right over there.